Warren Edward Buffett, widely known as the Oracle of Omaha, is one of the most renowned and successful investors in the world. Born on August 30, 1930 in Omaha, Nebraska, Warren Buffett's life story is a testament to his exceptional financial acumen and unique approach to investing. This narrative will delve into the rich history and captivating journey of Warren Buffett, chronicling his rise from humble beginnings to becoming one of the wealthiest individuals on the planet. Warren Buffett's journey began in the heartland of America during the Great Depression. He was born to Howard and Layla Buffett, and he displayed an early knack for numbers and a love for business. His father, a stockbroker, and his mother, a homemaker, instilled in him the values of hard work, frugality, and a strong sense of ethics. One of the pivotal moments in Buffett's early life was his discovery of a book at the Omaha Public Library at the age of 7. 1,000 Ways to Make $1,000. This book ignited his interest in finance and investing, and he began to apply the principles he learned to various money-making ventures, such as selling chewing gum, soda, and delivering newspapers. Buffett's intellectual curiosity and aptitude for mathematics led him to excel in school. He graduated from Woodrow Wilson High School and was accepted into the Wharton School of the University of Pennsylvania. However, he transferred to the University of Nebraska to be closer to home. After completing his undergraduate degree, he applied to Harvard Business School, where he was rejected but eventually accepted by Benjamin Graham, a renowned value investor. Buffett idolized Graham and his investment philosophy, which emphasized the intrinsic value of a company's stock. Graham's teachings would become the cornerstone of Buffett's investment strategy. Upon completing his studies at Columbia Business School, Buffett worked briefly for his father's brokerage firm before striking out on his own. He established Buffett Partnership Limited in 1956, where he would manage investments for others and apply the principles he had learned from Graham. Warren Buffett's early investment successes came during his partnership years. He employed a unique approach to value investing, buying undervalued stocks and holding them for the long term. His partnership delivered exceptional returns, attracting more investors over time. In 1962, he began investing in Berkshire Hathaway, a textile manufacturer on the verge of bankruptcy. Buffett soon realized that the company's core business was declining, but its assets, particularly its insurance subsidiaries, held enormous potential. He began acquiring more shares of Berkshire Hathaway, eventually taking control of the company. Under Buffett's leadership, Berkshire Hathaway transformed into a diversified conglomerate. He used the company's cash flows to acquire a wide range of businesses, including insurance companies, newspapers, and consumer brands. His ability to identify undervalued assets and manage them efficiently was instrumental in Berkshire's success. One of the most significant milestones in Buffett's career was his investment in Coca-Cola in 1988. He recognized the enduring strength of the brand and the company's global appeal. This investment has become legendary, demonstrating Buffett's keen insight into consumer brands. Throughout his journey from rags to riches, Warren Buffett has remained remarkably frugal. He still lives in the same modest Omaha home he bought in 1958. He has pledged the majority of his wealth to philanthropic causes, primarily through the Bill and Melinda Gates Foundation, making him one of the most generous philanthropists in history. Buffett's personal life has also been marked by stability. He married Susan Thompson in 1952, and they had 3 children. Tragically, Susan passed away in 2004, but Buffett continued to devote his time and resources to charitable work. Warren Buffett's investing philosophy is distilled into a few key principles. Invest in businesses you understand. Buy at a reasonable price. Hold investments for the long term. Be fearful when others are greedy and greedy when others are fearful. Diversify, but not excessively. Think independently and don't follow the crowd. These principles have guided his investment decisions and contributed to his extraordinary success in the world of finance. Warren Buffett's journey from a modest upbringing in Omaha to becoming one of the wealthiest individuals in the world is a testament to his intelligence, discipline, and unwavering commitment to value investing. His story is a source of inspiration for aspiring investors and entrepreneurs worldwide. As Warren Buffett continues to share his wisdom and wealth with the world, his legacy is secure not only as an astute investor but also as a philanthropist dedicated to making a positive impact on society. His life story serves as a reminder that with hard work, integrity, and a passion for learning, one can achieve extraordinary success, even from the humblest of beginnings.
Who's winning in this economy right now?
The rich. Guys like me. You know, we have gone from having 93 billion, top 400, in 1982 to having 2.4 trillion, 25 for one. People who, it becomes a more and more specialized market economy. It was an agrarian economy a couple hundred years ago. Very hard, you know, to get 20 times the wealth of the next guy because you were a little bit better farmer. But if you're better at some skills now, you can become incredibly wealthy at a very young age, not because you earned the money to build one steel mill and then saved it to buy another steel mill. So you get the capitalized value of an idea. And so the wealth moves big time, even on an anticipatory basis. And that has become more accentuated in the last 30 years.
I was just wondering, what would you consider to be the worst investment you've ever made?
The worst investment I ever made? The biggest mistakes are the ones that actually don't show up. They're the mistakes of omission rather than commission. We've never lost that much money on any one investment. But it's the things that I knew enough to do that I didn't do. We have missed profits of as much as, you know, maybe $10 billion in things that I knew enough to do and I didn't do.
Having proven yourself what you really could do with more skill, it's just remarkable. The test isn't whether you get the greatest business idea in the world the first time out. The test is whether you keep learning as you go along what your strengths are and what you can do for your customers, what you can bring especially to the party. And to do that, you need the education, that you need a genuine desire day in, day out to delight the customer.
My dad had various nicknames for me. He'd call me Fireball sometimes because I'd start little businesses. He didn't care about money at all. He believed very much in having an inner scorecard and I never worry about what other people are thinking about you. You know, just if you know why you're doing what you're doing, that's good enough. When I want to do something, I always want to do it big. I've said many times that 65 or 70, and the people that you want to have love you actually do love you, you're a success. Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because a stock goes down, you shouldn't own a stock at all. The first books I read on investment were actually in my dad's office. I just read and read and read. I probably read 5 to 6 hours a day. I mean, I figured out very early, you don't have to be that smart at this business, which is fortunate, but you do have to have the right temperament. The best gift I was ever given was to have the father that I had when I was born.